All right, hey guys, Sam back with you here on Friday, October 12th. So I had some requests from some people interested in a look at Tron, TRX, Tron to Bitcoin. So here's the 4-hour on Bitfinex. So some sparks over here. So you could make a pretty strong case here for this ABC. Now we'd have to allow for, if we're putting an Elliott count on it, we'd have to allow for this fifth to have double bottom down here. So we'd have to have this essentially a truncated 5 wave to complete that ABC. It's it's not spot on technical. It's 200% the length of the one, or pardon me, of the A projected from the B, and then we've actually gone through it a hair. So maybe there's something there. So you would have to, there's just no other way to count that since coming into this double bottom here. So the symmetry is a little wonky. That's one hell of a C wave, but there it is, right? So now we look here and we say, oh, okay, well, looks like we got something happening here. Well, take note of the fact that we've had this happen before. So we had the exact same looking thing here, and then we had it here as well. So these little 3-wave counter trends. Now what? Right. So every 3-wave, depending on where it is, it has the potential to turn into a 5 wave. So here you see essentially the same thing. Now what's different here? Well, all of these priors, look how the Vegas wave held it. So in the last one we had here, likely an ABC into the 4. Note the Vegas wave holds it as it did here. Well, now we've had a break and we're seeing the Vegas wave start to turn. Not that that's enough to base a trade on, but it's certainly an observation, and it gives some confidence to the idea that if we're going to get this up for a 5, then that would be potentially a significant technical development. And then every prior 3, you had them here, had it here, had it here, every prior 3, including this big 3, every one of these has failed and rolled over. Well, so now you come down here. So this is a fairly good example of what a diagonal looks like and how to approach, if you're looking for the long side, where that opportunity is. So let me pull this off here. Now, as I've shown you many times, that when you're looking at a diagonal, if you think, oh, maybe I've got a diagonal, the opportunity here is in the 4 to the 5. So we want to take the beginning of the proposed wave 1 and take it through the pivot of the wave 3. Right, what do we get? Right, so right to golden zone. So just what you did. And in fact, if you did not see that video I did the other day on Ripple, and you're curious about how algorithms trade, this is a pattern that they love, right? And I would encourage you to watch that video if you haven't. This alternating the 3-wave structure, they're often, very often, if you're going to get this move, if you're going to get the move to the target here, to our algo target, this is a place to look for a reaction. So you had a very small reaction as it came into that Vegas wave. They had enough legs to get it down to the 618. So we know what happens there. Right? We don't have to wonder, why does it do it there? Well, so we know an algorithm kicks in is defending there, right? They defend all the way to the 65, and it has that as a target. Now, so here's just a good combination of an algo play with an Elliott count. Well, if it were to go up and do that, well, we'd have ourselves a leading diagonal. Leading diagonal only found in the 1 wave or the A wave. So if it were going to be a 1 wave, right, that's what we all hope, is that this is the first sign of a motive wave getting started here for the potential to see a trend change. Well, keep in mind that the other potential here is that this is just a bit, let me get this. Sorry, here, let's get it this way. That we had, remember, motive wave, it's either an A wave or pardon me, is what I want to say. If we have a 5-wave structure off of this low, it's either a 1 wave or an A wave. Well, let's just think for a second, what if it's an A wave? Well, and then we're going to have something like this, and we're going to go up here. So let me try and put that together. So I don't know if I can do it in this time frame. So if we were to go up and catch that, so let's put the whole piece together. So let's say we go up here, we hit that algo target, we get a motive wave, right? So 1 wave or A wave. Well, I'm going to redo this here. So let's do it this way. So if we complete this 5, all right, now we've got our potentially 1 or an A. Well, we're anticipating, right, if we get that we're going to have 3 to correct it. And if we're going to come out of that, then we're going to look for 1, 2, 3, 4, 5, right? So now at this point, we don't know if it's A, B, C, or 1, 2, 3. Now, the distance of this C might be a tell. But if we pull back out, so let me go back to a 12-hour and put that together. All right, so just don't want you to get your bull party hats on just yet. All right, so let's look. So if we get out of it, okay. Well, how did I get that? Let's get back over here. All right, here's what I want. So let's think for a second. If this came out of here in 5, right? It's 1 or an A. And we get a 3-wave correction. It's 2 or a B. Well, if we're going to go up here and get 5 to complete, we can't confirm that it's anything other than an A, B, C, because we're going to be until we get the 4 and the 5. Because what are we going to run into? So if I just take the last pivot that was significant to the market, right? Well, here 50 and the 618 are going to be sitting there, right? So we know there'll be algorithmic participation at the 50, and they'll defend to the 618. So if we were to go up here and get something like that, you got to pay attention to the possibility that it may just be a larger A, B, C going in before this thing resolves, and we get another push down. So this would end up being 1, 2, 3 A, B, C into the 4, as long as we don't challenge this 1. That certainly holds as valid, and then you set it up for the potential for this to go down one more time, right? And we get that. Now we have a very full, and we have better symmetry, actually. We have better symmetry in this 1, 2, 3, 4. Now, the symmetry breaks down a bit here in the length of the 2 relative to the 4, but we can't eliminate that possibility. I suppose the other possibility here is that this... well, that seems less likely, so I won't take us through that. Okay, so here's the key to this. So as bulls, if you're looking for this and you're like, how do I know? Well, how am I going to know if it's an ABC or a 1, 2, 3? Well, to some degree, the range of this third move here. So if you got something like that, right, we went golden zone and we're pushing up. If you go up to the 1618, which this is our little shorthand, so it would have to look something more like this. Get that off of there. If you got something like that, right? So now so let me put it in Elliott swing relationships. So if we go down to the 2, right? We come up to the high probability zone for our third wave. Now we're leaning more into this as a bullish move. But even still, you can't confirm it until you get the 3-wave 4 and then the push to the 5, so that you get. So you get so let me take this off, so that you would have the 4 and the 5 to imply that we now had potentially of a larger degree. We had just the 1 wave starting. So let's get that up a degree or 2. We'll get to minuet. All right, so something like that. That's what we're looking for. So this potentially just the 1 wave of a larger degree, right? So this would start it. We would need to see the big push in the third. We need an impulse in that third. Ideally, you're going to go to a target that would be consistent with a third wave, which would put us right here at the 1618, retrace into the 4, come down. So it's the same construction every time, guys, right? You know how this goes, right? So we put that here. So we've got we've got an impulse into the 4. We come down, into the 3. We come down for the 4. We don't overlap the 1. We get a 5. Now we've got a potential significant trend change. What happens after that? Right, same thing every time. So just once we've got 5 completed, we pull it up. The next big opportunity would be down here between the 50 and the 618. Right, same thing every chart, every time. That's the point of these videos. Nothing changes. The approach does not change. It's that consistency and that willingness to maintain the discipline to do it the same way every time. Right, that's how. So again, you're going to get stopped out more often than not. You're going to be wrong more than right. But it just takes one of these, or to follow this roadmap, where it's almost like you've got an unfair advantage. Right? It just takes. Most successful traders will tell you it's a true 20-80. The majority of their success is from 20% of their trades. The rest is all you're just fighting it out here. A little winner, a little loser. It's the one that you catch the turn because you've laid out a roadmap. And you know what to anticipate. That's what makes the difference. It's being there and being willing to buy that, even though you've got stopped out previously, or you took this, or you took a loss. And you're like, God damn, this shit doesn't work. I don't know what's. It's the same thing every time, because the one thing that and I've said this many times, it's the time that you don't pull the trigger here. I guarantee you that's when it goes, because not pulling the trigger is the mistake. And the market has an unbelievable capacity to punish mistakes. Right? It's constantly testing you. Always. So think of it that way. You're constantly being tested by the market and the market participants, whose sole objective is to separate you from your money / Bitcoin, whatever it may be. Their job is to take your money, right? And they're going to do everything they can. Fake you, juke you, to create noise, take it down before it goes up, take it up before it goes down. They're going to do everything they possibly can to dig into your wallet. Right? That's the playing field that you're on. Right? You got to accept that. So how do you operate in that? Well, you better have a good plan, and you better be consistent, and you better be insanely disciplined with your money management. Right? It's the time that you move a stop. Oh, I'm pretty sure it's going to go. Oh, well, okay, maybe it's a diagonal. Right? Oh, okay, well, it's not going to take out that low. That's what does more damage to and ruins more trading careers than anything else. It's not the analysis. It's that lack of discipline in first taking the trades as they set up, and then if you take it or you're late and you're moving your stop and like, nah, I know I don't want to take that stop. I know I'm going to be right. It's going to go eventually. I know it's going to go. That's the knockout blow that you don't recover from. I'd rather take the stop 3-4 times here, but still with small risk to be there so that I'm there for the 5th time when it goes. It's just the reality of trading, guys. It's a discipline, and it's easy to lose control of that discipline. Very easy. The emotion of money. Oh, you got a winner. I want to take the winner. Loser, shit, I hate losers. I don't want to get stopped out. I'm just going to move it down a little bit. Just a little bit more. It just needs a little bit more room. I saw a tweet. Some guy sent me a chart that looks like, right. So if you're looking at charts, we all see what we want to see in the chart. And if you don't see what, you keep looking, right? If you ever find yourself doing that, well, where's a bullish setup for Tron? I know there's going to be one. Now you're Googling, you're over on TradingView, you're looking for Tron. Someone who's got a bullish count. You want to make the decision yourself, right? Now, so there's a learning curve in learning how to do that, and that's hopefully where an organization like ours, like Trade Devils University, can fill the gap here. So you understand how to do this, where the probabilities are, how to approach the money management. That's what we're teaching you. The analysis, that's the fun part. Right? If you like this kind of stuff, it's just a giant puzzle you're trying to solve and identify those probability zones. Right? But again, knowing you're going to be wrong more than you're right. That's the other thing that kills traders all the time. They can't deal with it. They can't deal with the idea that they're going into something where they're going to be wrong far more than they're right. Right? Not everybody is suited to that. It takes practice to be able to accept that, right? And you need the confirmation, the validation that comes from laying out a roadmap and getting it just like this, right? Follows it to the turn, right? So that'll offset a whole lot of losing trades. But you got to have the discipline. You got to be willing to take the trade when you're unsure because you're in a probability zone. You got to have the discipline to take the stop and go again, take the stop, go again, because the time you don't take it, that's when it goes. And now you've done more damage than the stops did to yourself emotionally, because you're like, oh, fuck, I should have. I would have. See, I could have, but that's the negative self-talk. And then the next time it comes, either you're overly anxious or you're taking too much risk because you're trying to make up for the loser you just had. It's a downward spiral here. You know, if you find yourself in that state of mind, the best thing to do is to take a day or two off, or just trade sim. Just get your confidence back. Right? This is not easy. This is not an easy way to make money. So you better have a clear trading plan. You better have very disciplined money management rules, and you better have a methodology that you can look at and identify and know that while nothing works all the time. Nothing produces winners all the time. If you just work through, if you take the time to work through the charts with this methodology, even if you don't want to deal with the Elliott Wave, just work through the market geometry and the algo pulse, you'll be just fine. The Elliott Wave, that's just a kicker, right? But that's where all the complexity is. That's what it's interesting. You know, we've taught hundreds and hundreds of students now where they end up spending all their time is on the Elliott Wave. All right, and I would tell you it's not essential. What is essential? Understanding the algo trades and understanding the market geometry. Elliott Wave, right? It certainly is worthwhile. I use it every day. There's not a chart I don't identify a count on, but it's not essential. That's essential, right? Of course, and then putting a big fat pitchfork on the whole thing, right, is going to be a factor as well. Use the market geometry. All right, guys, you want to learn how to do this? We can help you with it, right? Come on over to TradeDevils.com. You can learn more about what we're doing. You can always, we've got a free public Discord. It's got several thousand people in there. A lot of idea exchange in there. It's all going to be very consistent, right? So if you're interested in this methodology, this is a place to come get connected with other people that like-minded traders. All right, guys, with that, I will wrap it for the weekend. I'll be back on Monday. Until then, you guys have